If you're just staring at your charts looking for shapes and patterns, I've got news for you. You're missing the most important part, the story. Today, we're going to break down how to actually listen to what the market is telling us and how to build a real professional framework around that narrative.
So let me just ask you this straight up. Are you trading the patterns or are you trading the story? It's one thing to see a double top and just react, but it's a completely different and way more profitable thing to understand why that pattern is forming. That's the leap from being a reactive trader to a professional one.
And this gets us to the absolute core philosophy here, trading with a story. What does that mean? It means every single trade you even think about taking has to be a logical chapter in a bigger narrative. We're not hunting for random signals. We're looking for a plot, a story that actually makes sense as it unfolds on the chart.
Okay, so how do we piece that plot together? It really comes down to consistently asking these three questions. First, who is trapped? Who is on the wrong side of this move and is about to feel the pain? Second, where's the liquidity? In other words, where are the big pools of orders sitting? Because price is drawn to those spots like a magnet. And finally, what time window are we in? The time of day, the day of the week, it all dramatically changes how the market behaves. These three things, they are the building blocks of our entire story.
Now, every good story needs a setting, right? For us as traders, that setting is the macro market bias. It's the view from 30,000 feet. Before you even dare to zoom into a 1-minute chart, you have to understand the bigger picture, the major forces that are really in control.
And here's the one rule that you cannot, under any circumstances, break. Your macro bias is your anchor. It keeps your whole plan from drifting away. So if the big picture is screaming bearish, but you see a little bullish signal on a short-term chart, you got to treat that with some serious suspicion. If the story doesn't line up across all time frames, you sit on your hands. It's really that simple.
So how do you even build this macro bias? Well, you start looking for major clues, like a detective. For instance, did price just sweep above a major high, fooling everyone into buying? And then, bam, reverse hard. That's a massive clue that the market is weak. Or is the market just stuck in this sideways, choppy mess? That tells you there's a ton of uncertainty. Or maybe there are big world events making traders nervous about holding anything overnight. You put these pieces together, and that's how you build your macro story.
All right, once you've got your macro direction locked in, the very next thing you have to do is check the road conditions. Are we looking at a wide open highway where price can just fly, or are we heading straight into a 5 o'clock traffic jam? Honestly, this might be the single most important call you make all day.
And believe me, these two environments are like night and day. On one side, you've got the traffic jam. It's just a mess of choppy, overlapping price action. Trying to trade in this is a nightmare. Your stops get hit, your targets never get reached. But then you have the open highway, a clean, beautiful directional move. This is where the A-plus trades live. Your number one job is learning to tell the difference.
So, this is absolutely crucial. When you identify that traffic jam, that high-resistance environment, the professional move is to do nothing. Put your hands in your pockets and walk away. It's not about forcing trades. It's about protecting your capital until that open highway finally appears. Patience really is your superpower here. Okay, so if we're waiting for the highway to clear up, what clues tell us it's coming? Well, the market actually leaves footprints in the sand, showing us where it's likely headed next. We just have to know how to read them.
And one of the clearest footprints out there is something we call an inefficiency. The best way to think about it is like a pothole on our highway. When price moves way too fast in one direction, it leaves this little structural gap behind. And just like a road crew eventually has to come back and fix that pothole, the market has this incredible tendency to revisit these areas to fill them in.
This brings us to a simple idea we can call the patchwork concept. It's really just a three-step dance. First, you get that super fast price move. Second, it leaves behind one of those inefficient gaps. And third, sooner or later, price tends to swing back around to that area to patch the hole. The key takeaway is this: these gaps act like powerful magnets for future price.
And you know what the best part is? You don't need a dozen confusing indicators plastered all over your screen to see this stuff. These footprints, these inefficiencies, they are right there in the raw price action. It's the purest information you can get from the market.
So, let's recap. We've got our macro view, we know how to assess the conditions, and we can read the clues. Now let's put it all together into an actual execution framework. This is where the story finally turns into action.
First things first, let's clear up a huge misconception. So many traders think the opening range is just the first 15 minutes of the day. Nope. From a professional standpoint, the real opening range, where the market finds its initial balance, is the first 30 minutes. And inside that critical 30-minute window, you have got to be careful. That very first price gap you see pop up, it is not an automatic go signal. More often than not, it's a trap designed to catch all the impatient traders. A real, high-probability entry only happens when the full story lines up: the narrative, the liquidity, and the timing.
You know, timing is also a massive factor on the weekly scale, especially when it comes to Fridays. We can actually anticipate what the market is likely to do. Think about it. If it's been a monster trending week, you can probably expect a smaller pullback as people take a little profit. But if the week has been a choppy, consolidative nightmare, watch out. You could see a much deeper retracement as everyone scrambles to get flat before the weekend.
And really, all of this, it just comes down to mindset. In those uncertain, choppy conditions, what do the pros and the wealthy participants do? They pull back. They reduce risk. They wait for things to get clear. Meanwhile, retail traders tend to do the exact opposite. They get impatient. They overtrade. They force things that just aren't there. Adopting that professional mindset, that's the key to staying in this game. Look, at the end of the day, this whole framework is designed to do one thing and one thing only: to build your own internal confidence and make you a self-sufficient trader. The goal isn't to have you blindly follow someone else's signals. It's to teach you how to read the market story for yourself, so you can make your own calls with conviction. So I'm going to leave you with this one final thought. The market tells a brand new, completely unique story every single day. The only question now is, are you finally ready to start listening?